Ever pondered over the difference between tax evasion and tax avoidance? They may sound similar, but in reality, they are worlds apart. Let's dive into these two concepts. Tax evasion, first and foremost, is an illegal act. It's a deliberate attempt to cheat the system by misrepresenting the true financial state of affairs to the tax authorities. This could mean underreporting income, inflating deductions, or hiding money and its true source. It's a risky game to play, with severe penalties including hefty fines and even imprisonment. On the other hand, we have tax avoidance, which is a bit more complex. It is the legal use of the tax regime to reduce the amount of tax payable by means that are within the law. Think of it as bending the rules without breaking them. This could involve strategically planning your transactions or using tax benefits and breaks to your advantage. So, in the simplest terms, one is against the law, and one is bending the law without breaking it. Now that we understand the basic difference, let's delve into the legal, moral, and philosophical distinctions between tax evasion and tax avoidance. From a legal standpoint, tax evasion is a crime, punishable by law. It involves intentionally misrepresenting income or assets to avoid. On the other hand, tax avoidance involves using existing tax laws to reduce one's tax liability, often through smart accounting or strategic financial planning. However, the moral and philosophical perspectives paint a different picture. Tax evasion clearly involves dishonesty and deceit. But what tax avoidance? While it's allowed, it often raises questions about fairness and social responsibility. Is it right for individuals or corporations to use loopholes in the law to pay less than their fair share, while others bear the brunt? It's a thin line between smart accounting and crossing into the realm of illegality. The cost of tax evasion and avoidance is vast and burdensome for governments worldwide. But how do they curb these practices? It's estimated that every year, governments lose billions of dollars due to tax evasion and avoidance. That's money that could be spent on healthcare, education, and other vital public services. To curb tax avoidance, governments have implemented various measures. These include policy changes such as closing loopholes in tax laws and stricter enforcement of existing laws. They've also increased cooperation with international counterparts to tackle tax evasion on a global scale. However, the effectiveness of these measures is a hot topic. While they have certainly made some headway, many believe that more needs to be done. The fight against tax evasion and avoidance is a continuous one. Whether we like it or not, taxes are a vital part of our society. The difference between evasion and avoidance is not just a matter of legality, but also of ethics and responsibility. You might be wondering, why should you care about tax evasion and avoidance? Well, the truth of the matter is, these practices constrain public service funding and infrastructure. When individuals or corporations sidestep their tax responsibilities, it's the economy and society that bear the brunt. Schools, hospitals, roads, all rely on tax revenue. The ripple effect on the economy can be significant, creating an unbalanced financial landscape. Understanding the difference between tax evasion and avoidance and their implications is crucial for informed citizenship and responsible financial behavior.